Welcome to Talk Tickers, where we give you the essential insights from today's earnings calls. Today, we're jumping straight into the latest results from Marine Products Corporation.
That's right. For Q1 2025, they reported sales of $59 million.
Okay, $59 million. How does that stack up against last year?
Well, it's actually down 15% compared to Q1 2024.
Down 15%.
But here's the thing. That's actually a much slower decline than they saw through most of 2024. Remember those 30, even 40% drops?
Right. So the rate of decline is slowing down. That feels like a key point.
Exactly. It's a moderation.
Got it. Okay, what about profitability, gross profit?
Gross profit came in at $11 million. The margin was 18.6%.
And how does that margin compare?
It's a slight dip, down about 60 basis points year over year.
Okay, and bottom line, earnings per share.
Diluted EPS was $0.06. That's down from $0.13 in the same quarter last year.
Oof, quite a drop there.
EBITDA followed suit, totaling $3.4 million. That compares to $5.9 million back in Q1 2024.
So profits definitely took a hit, but I thought I saw something positive on the cash flow side.
You did. Operating cash flow was quite strong, actually, $10.8 million.
Wow, okay.
And free cash flow was right behind it at $10.7 million. So they are still generating good cash.
That's crucial. What else looked positive? I remember something about inventory.
Yes, channel inventory, that's the boats sitting at dealerships, is down 18% compared to Q1 last year.
Okay, 18% down. That suggests dealers are moving stock, right?
That's the implication, yes.
Yeah.
Fewer boats clogging the pipeline. Although it's worth noting their own boat sales volume, unit-wise, was down 19% year over year.
Right, so fewer boats sold overall by them directly. Did they manage costs well, SG&A?
They did make progress there. SG&A expenses were $8.3 million, which is a 5% reduction from last year.
Good. And their balance sheet. Cash, debt.
Very solid. They're holding about $57 million in cash and, importantly, zero debt.
No debt is always nice to see. Okay, so that's the snapshot. Let's get into the commentary. Management's outlook, were they optimistic despite the numbers?
Somewhat, yes. Cautiously optimistic, maybe. They actually suggested a potential return to year-over-year sales growth in the second half of 2025.
Growth. Really? Okay, that's interesting. But they must have flagged some risks.
Oh, absolutely. They were clear about ongoing industry headwinds. Number one is still that channel inventory.
Even though it's down 18%.
Yeah, it's better,
Right.
But they're saying it's still, elevated compared to where it ideally should be.
Okay, what else?
The usual suspect. The uncertain interest rate environment. That always impacts big ticket purchases like boats.
True. And anything else specific?
Tariffs. They specifically called out the potential impact of tariffs on key input costs.
Tariffs. What kind of inputs are we talking about?
Things like engines, navigation systems, stainless steel, aluminum, fiberglass, pretty much all the core components.
Right. And if those costs go up because of tariffs?
It could force them to raise prices on their boat models, which, could dampen demand further.
So how are they planning to deal with these pressures? Cost control, tariffs?
Their focus is really tight management of costs and production.
Yeah.
Aligning output very closely with actual demand.
Makes sense.
The priorities are maximizing cash flow, keeping that strong, and just being ready for when demand eventually picks up more significantly.
And capital spending, are they pulling back there?
Looks like it. They project about $3 million in CapEx for the whole year, and Q1 spending was tiny, under $100,000.
Very lean. But didn't they also mention something about spending money, acquisitions?
Yes, that was a key point. They stated they are actively pursuing acquisitions, using that strong cash position and lack of debt.
Interesting. What kind of acquisitions?
They want to expand the business, specifically looking at boat categories where Marine Products doesn't currently have a presence. Diversification, essentially.
Okay, so M&A is definitely on the table. Any other sort of corporate housekeeping items mentioned?
Yeah, a couple things. They filed an S3 registration statement. That included registering shares held by the Rollins Family Control Group.
Rollins Family, okay. Does that mean they're planning to sell?
Management characterized it as routine corporate housekeeping. They specifically said it doesn't signal any change in the family's supportive relationship with the company.
Right, good clarification. Any board changes?
Yes. Steve Lewis was elected to the board, and Gary and Pam Rollins retired from it.
Okay, so some movement there. Let's try and put this all together for listeners following the stock or the industry. What's the bigger picture here?
Well, I think that moderation in the sales decline is pretty significant, going from 30-40% drops last year down to 15% this quarter.
It could be a signal, right? A potential turning point.
Could be. for the company, maybe even for the broader marine industry. And you also saw that sequential sales increase up 23% from Q4. That adds a bit more weight to the stabilization idea.
Right. And the inventory reduction. How important is that?
Crucial. Lower channel inventory is a sign of a healthier industry, less pressure on dealers, but it's a delicate balance. They need to keep reducing inventory, but also run their factories efficiently enough to absorb their fixed costs. It's a tricky line to walk.
Yeah, that makes sense. And those external risks, rates, and tariffs, they just add layers of uncertainty.
Exactly. There's significant risks hanging out there. Higher rates could hit demand, tariffs could hit costs and margins. Investors really need to keep a close eye on how those develop.
So, potential stabilization, but definite risks. What about the acquisition strategy as a factor?
It's a potential catalyst for sure. Growth, diversification. But acquisitions are always risky too, right? Finding the right target, integrating it successfully. That's key.
True. But the financial position helps there.
Absolutely. That strong cash flow and zero debt gives them a lot of financial flexibility, whether it's for acquisitions or just weathering any economic turbulence ahead.
Okay, let's shift gears. Time for our This Is Not Financial Advice segment. Given everything, what's an outrageous but plausible trade idea you can think of related to marine products?
Okay.
Yeah.
Outrageous but plausible.
Oh, given their explicit plan to pursue acquisitions and that strong cash position.
Yeah. How about this? You could consider a long position in marine products itself, maybe paired with short positions in some of their key component suppliers.
Suppliers, like engine makers or navigation systems.
Exactly. Particularly ones heavily reliant on the recreational boat market. The thinking is, if MPC successfully acquires competitors or just gains market share, they might get more leverage over suppliers, squeezing their margins, even as MPC potentially benefits.
Interesting. So betting on MPC gaining power in the supply chain through M&A. Okay, that's definitely unconventional. Got another one.
All right, let's think about the tariff risk. Tariffs could raise costs for materials like aluminum, fiberglass, steel.
Right, hitting boat builders' margins.
So maybe a speculative long position in companies that produce those raw materials. But here's the twist. Focus on producers who are diversified, not just reliant on the marine industry.
So like a big aluminum company that sells to aerospace and auto too.
Precisely. The idea is it could act as a sort of hedge. If tariffs do drive up raw material costs, these producers might benefit, while boat builders like MPC face margin pressure. Plus, you're tapping into broader demand for those materials. It's a bet on wider inflationary pressure in those specific commodities.
Okay, playing the raw materials angle, but diversifying away from just boats. Definitely some creative thought experiments there. And that brings us to the end of our deep dive on the Marine Products Corporation earnings call.
We've hit the key results, management's view, the challenges, the opportunities.
And stirred things up with a couple of, let's call them imaginative trade ideas.
Just remember, everyone, this is purely for informational purposes. It is absolutely not financial advice.
Always do your own thorough research before making any investment decisions. So what are your takeaways on marine products? That acquisition strategy, let us know what stood out to you.